Hello everybody. So today a quick update video as to what I'm doing with my portfolio, my investments. I haven't published in a while. Again, so sorry about that. I mean, this is a hobby for me. As much as I would like to have more time and professionalize it, it's a hobby, you know. So it's kind of like I'm not trying to sell you anything. So it's kind of my hobby, and didn't have time this week. But I'll be back. I'll be back strong this week, I hope, with earnings season if time permits. So talking about topic number one that I want to talk about, of course, is Tesla. So Tesla, my last few videos on Tesla that I've made, you know, I get things like comments like, oh, it's brutal, it's a disaster, and you know, these comments are tiring because when you invest in disruptive assets, you always hear this is always something I hear, and you know, if you study innovation, this is also always something you hear. People in the 1800s didn't trust bridges made out of steel. It was not possible for bridges to exist because steel was not a proven technology, right? They did not trust the car. The car they did not trust because the human body could not go more than 35 miles an hour. They did not trust flight because flight was like meeting God in the sky, and you could not do that, right? They did not trust electricity because they saw in the newspaper that Edison had invented the electric chair. So factories were like, there's no way I'm switching to electricity. And today we hear the same thing about electric cars. Electric cars are a scam. They're never going to work, etc., etc. Kind of a, you know, analysis that, in my view, lack a complete depth of analysis. You know, it's like batteries are a stock, they're not a flow. They are better in every single way, and it comes to the point that when you see like a reviewer, they don't even acknowledge anymore the fact that if you want to have a sports car, nothing beats an electric car. Like, I was watching one of the latest Marquez video again, and he did that again. He said again, well, we don't even mention the fact that, yeah, if you really want a sports car, it's $79,000 the Model S. Right? It's like they don't even mention that fact anymore, as if people are in denial that there is a superior technology, right? Batteries are going to get much, much better going forward. We are going to have a 1,000-mile battery because the laws of physics is really what limits us in how much energy dense we can make these batteries, and we're going to make them denser and denser and denser. And these products are the future. Electric cars are the future, and gas cars will be looked like horse and buggy in 100 years, right? That's how we look at gas cars, and we'll likely have forgotten about horse and buggies. At least that is what I believe. So I'm expecting some more comments when I make this video of people telling me, oh, electric cars are not going to be a thing. That's okay. Let's quickly be objective. Let's talk about the stock performance. The stock performance, 144. I remember, you know, at the turn of 2023, late 22, early 2023, the stock was trading at 100. Everybody was saying it was going to go to 50. Some were saying it was going to go to 0. I expect these narratives to come back. As far as I'm concerned, we're still up 40% from those 100 level. Now, I am in the red on the stock. My average is higher than 144, but it is not 200. It is lower than 200. So I'm in between in the average here, and I'm increasing my position. I want to use a quote from Buffett here. Rarely do that on this channel. You know, I'm not a big fan, but the quote, I'll use it, is if you're not willing to hold an asset for 10 years, you shouldn't hold it for a minute. And provided that the fundamentals don't change, and that's how I feel about most of my investments. In fact, I don't believe really in selling stocks. I think you should make your stocks part of your estate planning, and you should never ever sell them, and you should borrow against them. That is generally how I think. That's why the channel is named Beat the Denominator. But as far as I'm concerned, this is a stock that I want to hold for the very, very long run, and I find it a steal. And so what I'm trying to optimize, I'm not trying to optimize my average cost. I'm trying to optimize the number of shares. How many shares do I have? That's what I'm trying to optimize. The more shares I have, the happier I get. And the price of the stock is really not important to me. And regarding the earnings tonight, I mean, of course, I'm not going to cover them. Everybody's going to cover them on YouTube. So I'm not really going to cover them. But The truth is, you'll see these faces with mouth wide open. Oh, awful shocker! You'll see all of that over YouTube, and they will tell you how terrible the earnings are. I'm sure, but the truth is, nobody knows. Nobody knows how low Tesla is going to go. Is it going to 100? Maybe, maybe not. I don't know. I really don't care if it goes to 100. I will buy more. I don't have leverage. I have a teeny tiny bit of margin. I don't have any meaningful leverage to speak of. Therefore, I'm not going to get wiped out. And the problem is really is if you're going to get wiped out and you went crazy on leverage, yeah, that's the problem. But I'm not going to get wiped out. This is a company that has a bunch of cash. They are the leader in their field. They are the leader in electric cars, right? The competition, the legacy competition, has entirely given up on electric cars. What we have in the electric car landscape is we have Tesla and China. This is very similar to the phone landscape. The phone landscape, we have Apple and China, i.e. Android phones made in China, right? So we have Chinese making the Android phones and we have Apple making the Apple iPhone, right? This is similar story for Tesla. Given that the competition is giving up, I was looking at GM earnings, bragging about making all of this money, not really looking at their debt, doing all of this financial engineering. It's like not looking at the long term. If you look at the long term, where this is headed is we're going to have Tesla and China. Tesla and China, just like we have Apple and China for the phones, we seem to be having Tesla and China for the cars. The fact that the competition has given up on electric, the fact that Tesla keeps dropping the prices is the reason why, nobody can compete against Tesla, because they're willing to not make that much money on these cars. Because they know they're going to be able to turn on FSD and get everybody to pay $100 a month for $79 or whoever knows what price it's going to be in the future. And that's okay, because they'll sell connectivity in the future to more cars, right? You'll add connectivity, Tesla connectivity, maybe for $15. And maybe going on, who knows, they will make some money perhaps on entertainment subscriptions, gaming subscriptions. There's lots of things, lots of ways Tesla can make money. Right now, they're looking for marketplace domination. They're looking to be the number one, and they are still the number one. They're not dropping. The Model Y is still the best-selling car in the world. It's still the best-selling car in every single market. And in the US, with the recent price drops in some states, especially those where you also get like a state tax incentive, you're at under $30,000 for the Model Y. Anyways, another point I want to make. Tesla, this is what I tweeted on April 17, and of course now, with today's price, right, at 144, Tesla is actually cheaper than Toyota on an enterprise value basis. Cheaper than Toyota. This company is cheaper than Toyota. Granted, Toyota is about 3 times the amount of revenue, but the question is, you're playing for where the puck is headed, right? Eventually, Tesla will have more revenue than Toyota because Toyota has not made that move. They're sticking to hybrid. They're sticking to hybrid. They believe in hybrid. And they don't look at things like the debt, $241 billion in debt. And Tesla has the most agile teams, with the most agile engineers working in small teams, moving from project to project, from team to team. Tesla is a giant startup where everybody's working on projects. Toyota is a bureaucracy nightmare. Like you have a very agile company on one hand, a totally not agile company, legacy company on the other hand, highly efficient, right? Toyota is the one who popularized pool manufacturing. Many of the issues we had in 2020 actually can be traced back to the manufacturing practices at Toyota that they promoted. But this is an efficiency machine that Toyota is. But if the efficiency machine is not working on the product of the future, it doesn't really matter, right? I mean, it doesn't matter that when Kodak was an efficiency machine at analog photo makers, right? Doesn't really matter that they were making analog photos, Kodak. Well, guess what? We went to digital photos, and then they died. So. Anyways, I do not understand this. I don't understand how a company like Tesla could be trading less than a company like Toyota, but that's okay. And we have, again, and that's the market today. Oh, the price drop is bad narrative. And I have said multiple times on the channel, but whether it is Teslas or whether it is Chinese electric cars, these products are consumer electronics. They are like your flat screen TVs, they drop in price. They go down in price every single year, like your flat screen TV. I once bought a flat screen TV for something like $700. Now that flat screen TV, 3 years later, is something like $200 at Walmart or something like that, right? We know flat screen TVs decrease in price like crazy fast. This is the same for cars in my view. This is going to be the same, and we're going to have a much different view of the car business, which is going to be mostly a software business in the future, I believe. And so legacy cars are not that. Legacy cars are appliances. Their prices go up every year, year after year. Right? This is not what happens for large consumer electronics items like Teslas or Chinese electric cars. Think of them like big TVs or big phones, giant phones with wheels is a better way to look at it. So, if Tesla drops tonight, I'm obviously thinking of adding, and I've been holding off some buys lately over the past few days, but I'm thinking of buying if it drops tonight, because if you look at history, it drops after the earnings typically. If you follow history, I don't know, that might not be the case this time. Nobody knows. But I'm gonna sell some stuff, and I've identified 2 assets that I'm going to sell if Tesla drops tonight and tomorrow. So one of them is Open Door. So I'm going to sell Open Door. I'm going to take my loss, right? Capital loss, tax loss harvesting. This is a company. This was an asymmetric idea that I believed could be even bigger than a Tesla, right? Because they could have disrupted the entire real estate market. Well, they didn't do so thanks to Powell. Powell killed many great companies, including Open Door, I believe. But really, add the real estate, and this is a tangent, so I'm going to really quickly, but the judgment against the Association of Realtor on seller's agent, removing the seller's agent 3% fee, to me is thesis changing for Open Door, because the whole value prop of Open Door is that if you transacted on Open Door on their network, you were not paying a 6%, you were paying like 4% or 3%. Well, guess what? With the ruling against the National Association of Realtors, that already means that seller agent fee is going to be largely gone within the coming years. Buyers are going to be keenly aware of that, and I think Open Door has now turned into mostly a home flipper. And I don't want to be into the home flipping business. I don't want to be into that business. And so if Tesla drops more, I'm likely gonna sell that stock tomorrow. And also Airbnb. I'm also gonna sell Airbnb. Airbnb. I believe in Airbnb. I think it's a great company, but the growth is quite slow. And because of that, but I want to make the case that's slowly because of growth that I want to sell Airbnb. With some of the economic downturn that we are about to see, I feel people will be less likely to go on vacation, and because of that, the take rate of a company like Airbnb should go lower. The growth is too slow in my view, and so I'm looking to sell Airbnb, even though I still believe in the long term. We need a layer of a rental real estate, and Airbnb might be doing that. So if Tesla drops, this is what I'm going to sell. And going back to Tesla, again, I'll conclude really quickly. There's a lot of good things coming. This is just some of the catalysts that I see coming this year for Tesla. So, of course, the Robotaxi event on 8/8, and again, typically Wall Street doesn't pay too much attention to these events, but that still creates a lot of buzz and anticipation on the stock. So that's a more tentative catalyst in the future. Then we have a real catalyst, which is the Cybertruck. The Cybertruck's making money right now. That's a real catalyst. We also have it in there, but we also have the mega packs in California and around the world. But I say in California because Elon retweeted something the other day about how mega packs provided the most energy to California. I can't remember exactly, but they broke some milestone in California with a megapack. So their megapack business appears to be doing really well. So that's 2 concrete stuff with the megapack. Then we have AI and bot. Again, when you see the private valuations on a lot of these AI companies, we have to wonder why there is no premium whatsoever on Tesla when it comes to their AI. You know, they have their baby AGI, which is the FSD, right, which is the largest scale a real-world AI project, but you know, it's. I think the market is not efficient. The market is not efficient at all. But who was a co-founder of OpenAI, the company that revolutionized AI? Who was a co-founder of that company? It was Elon Musk. He was a co-founder of that company. So we have an AI leader at the helm of this company, just like Sam Altman, just like Mustafa Suleiman. These are leaders, and so Tesla is not seeing any premium, and that's okay. I'm accumulating more. We have a Model 2 coming, perhaps in 2027. Elon said it was not cancelled. We have a layoff, so this is going to be concrete money coming in, the layoffs, the Tesla layoffs, right? 16,000 people roughly. We have FSD improving fast, which means we should see a higher take rate of a $99 FSD. And then we have what? We have India announcement maybe coming. We don't know when. It seems like it's not happening this week, but there might be an announcement about India coming. These are all very real catalysts that I see for Tesla, which is why I'm very happy to own Tesla, and I want to add to my Tesla position. Now let me move on to another asset that I love very much, which is my number one asset, which is Bitcoin. Bitcoin flipped to become my biggest position in my portfolio a few months back, beating Tesla. Tesla was dropping, Bitcoin was tripling, essentially. So Bitcoin is still my biggest position by far. I consider Bitcoin to be a bond alternative for me. And by bond alternative, I mean I like to have a position that is similar to what they advise people have for bonds. So I take 100, I remove my age, and that gives me my positions. So if you do that, you get what I mean. It's like so my age is 35. So really, it's a 35% position is really what I mean. I wrote it wrong on this. Anyways, it's a 35% position on this for me. So my position is 35%. At least it's the target. It's higher than that right now, but it's the target. So to me, Bitcoin so much better than bonds for me. And why is it so much better than bonds? Well, of course, monetary printing. It's a contract to get more dollars in the future, but the dollars in the future are going to be worth much, much less than what the coupon is. So that's the main reason. But what's another reason is bonds now have counterparty risk. They didn't used to have counterparty risk. They now do, because every 2 years, and this has been a recurring theme, every 2 years we have treasury payments that are threatened to be cut. Now, that's sensationalism. They would likely be caught up later when politicians agree, but they're likely delayed at least every 2 years whenever politicians go into this raise the debt ceiling debate. And so because of that, I believe that creates a risk, and that's one of the main reasons why the rating agencies downgraded some of the treasuries, because if every 2 years you're going to have a debate as to whether you should pay your borrowers, I argue that's a very big problem. So to quote Elon Musk, and of course treasuries are in traditional finance seen as risk-free. To quote Elon Musk, we'll see how risk-free it really is. Aha. That's what he said in a conference call about 4 calls ago. We'll see how risk-free it really is. Aha. Yeah. We'll see. But I don't own any, so I don't really care. And moving on to Bitcoin again. The halving was on Friday, and it was a very special moment. The event worked. It all went as planned. Everything was fine. The miner fees went up quite a bit, actually, because of the Bitcoin inscriptions, the Rune inscriptions. So that was a big deal for the miners. We'll see when that gets reflected to their earnings, not these earnings, but the next. So that was a big deal. The fact that Bitcoin is getting cut in half every 4 years means that we should see a theoretical 2x, assuming that the demand stays constant, right? You cut the daily supply in half, and if the daily demand stays the same, theoretically that should lead you to a 2x. But assuming that demand stays constant is a big assumption. It likely won't. And as you may guess, I believe the demand will increase and the supply will decrease. So what that means is that, to me, in the worst case scenario, we have it at about 65K. So in the worst case scenario, this cycle 130 is realistic, assuming the demand stays the same, and assuming the demand doubles, you get to a 260. So in my view, 130 to 260 until late 2025, mid 2026 maybe. Late 25, late 24. I don't know. I don't know when it's gonna come. I just know you're gonna have a parabolic move to the upside because you have more demand and you have less supply. And of course, maybe in 26 or 27, we'll get back to 130 and the internet will be like, oh, crypto's dead again. But of course, we never reach the peak of the previous cycle. And so the highs of the former cycle become the lows of the next cycle, and so on and so on. And despite the market telling you it goes to zero and people on Twitter telling you it goes to zero, I don't believe it at all. I'm very happy with Bitcoin. To quote Charlie Munger, one of the biggest Bitcoin critics, late Charlie Munger, he said, over a course of 99 years, the currency is going to zero. That's what he said. And so I guess he could have been a Bitcoiner, but he hated Bitcoin. So, between Bitcoin and Tesla, which do I prefer between Bitcoin and Tesla? Well, right now I prefer Tesla. I mean, quite clearly I prefer Tesla right now. Keep in mind, my cost basis is much lower in BTC. It's hard to buy at 66. When I buy at 66, I increase my cost basis quite a bit. Right? Tesla, when I buy at 140, I decrease my cost basis. So I want to buy Tesla. The only exception that I make in buying Bitcoin is when it's MicroStrategy or Cleanspark. Cleanspark is a Bitcoin miner. I see those as compelling. I've made videos about this. And the only stock that I've meaningfully added to, aside from Tesla and Bitcoin proxies, is HIMS. So now this is kind of 3 videos in one today. So let me tell you about HIMS now. So when I look at a company like HIMS, and when I look at the fact that it had a 25% drop, it went down to almost 30% drop from its peak, and that was thanks to the market decline that we've seen over the past few weeks, I am very happy to add HIMS. When I look at the price on my spreadsheet, and if you're familiar with my spreadsheet, this is what we get, a 0.079 right now. So cheaper than even what it used to be, I guess historically it went even cheaper than that, but we're back to the dirt cheap level. I mean, if you remember, we were at the 0.1 a few weeks back, and now we're back at 0.7. So we are back to HIMS being the cheapest. How long is that gonna last? I don't know. All I know is that I like this company for the next 10 plus years. And why is that? Well, it's not because people on the internet tell me they like it or they don't like it, or it's not because I read like some good review or some bad review somewhere. No, it's because first principles thinking tells me we don't need 45,000 pharmacies in the USA in the era of fast and free shipping, which means that I'm on the side of people like Mark Cuban or people like Jeff Bezos who also see it too. We don't need 45,000 pharmacies. Why do we have 45,000 pharmacies? Well, just because of inertia, just because of legacy, just because that's the way it's always been done, and so nobody ever questioned it. But in the era of fast and free shipping, do we need 45,000 pharmacies? To me, the answer is clearly no. So a few online platforms can replace these pharmacies. How many of these online platforms could it be? Could it be 10? Could it be 5? Could it be 15? I doubt it would be 15. I think it's going to be just a few. And these online platforms will revolutionize pharmacy. And, just like Netflix killed Blockbuster, just like Tesla is killing Legacy Auto, just like Apple is killing BlackBerry, a few online platforms are revolutionizing the pharmacy business, in my own opinion. And HIMS, I think, has a shot at becoming one of those. HIMS is a digital pharmacy and a digital doctor together in one easy app, one easy-to-use app. All of this outside of insurance, with insurance removed. They are focusing on the cash cows of health, on what makes money in health, right? Those RX drugs that have fallen off patent, that are prescription drugs, that are very common, like statins, like metformin. That's the type of drug that they are prescribing, these very, very common molecules that are now off patent, that people take on a daily basis. And that's why they create a subscription around them, because people just take these on a daily basis, and all it takes is you mail them a package each month. And HIMS makes this process very easy. And instead of having to go to the drive-thru of your local pharmacy and yell out your last name, violating a bunch of HIPAA violations and all of that by yelling your last name to pick up your drugs, HIMS does it in a convenient, easy way through your federally protected USPS mail. So I think it's better in many ways. And in first principles, I think it's way better if you really think about it. HIMS makes the process of getting treated very easy by eliminating insurance. And if you do a surface analysis of this company, you will first see this as a negative. Oh, they don't take insurance. Who would use them? And if you value your time, if time is money, and sure enough, the minor health issues, you're going to get them in your 30s, in your 40s, where you're very busy, when you're very busy, when your time is money, when you can't take time off to go see 2 doctors, right, typically, then you will see paying out of pocket as a big plus. Paying out of pockets for your drugs is going to be a major plus in my view, because HIMS is inexpensive and it's easy to get, and it saves you time. So HIMS provides you a doctor digitally, and by providing you a doctor digitally, it avoids you having to dig through your main insurance for a primary doctor. And people change jobs all the time these days. Insurance are different. Networks are different. Whenever you change job, you have to change a doctor. Sometimes people have a minor health issue. They don't want to get through the hurdle of having to learn how the healthcare system works for their new insurance. They don't want to go through this hurdle. They don't want to have the anxiety of waiting for 4 to 6 weeks for a bill. This is something you do in case of an emergency, but if you have a minor health issue, this is something that people typically tend to avoid, and that's kind of how insurance makes money. Is you have a bunch of people in their late 20s, early 40s, early 30s, and these people, they never go see a doctor because it's just too much red tape, too much administrative, too complicated, and that's how these insurances make money. There's also another problem is if you want to get a minor issue treated, like for example, ED, for example, is a big issue that HIMS treats. Well, it's important to know that primary doctors, like unless you have a very simple, straightforward case, primary doctors will very often refer you to specialists, unless you're like very straightforward. But if not, they'll refer you to a specialist. And why will they do that? Because it's a liability thing for them, right? They don't want to prescribe you the wrong stuff, so it makes sense for them to send you to a specialist, except you may have waited a month or 2 to see your doctor, and then they send you to a specialist, and you may have to wait another 4 months to see a specialist. HIMS takes you straight to the right doctor. So it could be a specialist, could be a generalist, could be someone knowledgeable in your area, but HIMS takes you straight to the right doctor that you need. It can do that because insurance is out of the picture. Typically, it's not you who wants to go see the primary doctor first. Typically, you're smart enough to figure out which specialty you need, right? If you have a problem with your ear, if your ear is hurting, you're smart enough to figure out that you should probably see an ear, nose, and throat, ENT, ear doctor. You're smart enough, right? If you're a woman, you have problem with womanly things, you're smart enough to know that you should go see a gynecologist, but you can't do that. You have to go through a primary doctor first because insurance requires you to do so. Because insurance are efficient machines. And they want you they essentially want the primary doctor to deal with it because it's cheaper. So that's one reason why HIMS shine. Another reason why HIMS shine is, of course, insurance companies, they've implemented copays. And copays can be expensive depending on your insurance. They implement copays. So really, your health insurance is really not covering much if your copay is more expensive than what HIMS charges you, which in many cases is the case, and for some types of insurance, it's always the case. Like if you have a high deductible health plan, which a lot of healthy young people choose to have because that's like a stealth retirement account. So a lot of these people, if you have that, the HSA, right, the stealth retirement account. I mean, all of you are probably watching a lot of YouTube videos about finance and being savvy in finance, right? That's one of the main ways to save tax free. Triple benefit, right? You get the triple tax benefit. Anyways, that's why HSAs are great. So if you want to have HSA, most of the time you're going to have that deductible, and in that case, HIMS is certainly dirt cheap to get you treated for any minor issues. And lastly, and of course, this is just my opinion, right? This is not a fact. This is just my opinion. In my opinion, HIMS pharmacy platform offers a better healthcare. That's my opinion. And why is that? Is because with recommender systems, HIMS can analyze what drugs work best for its 1 million plus users. And based on how you answered your questionnaire, it can show the doctor what it thinks is the best drug for you based on data that is always analyzed always scanned through, right? It's not research that is stuck in time. It is AI always reanalyzing the data, and it can make better solutions. I think that's one of the big deals as to why sometimes the drugs decided by HIMS, which is AI-assisted doctors, is going to be better than a doctor who's been around for, say, the longest time and may have not read the best academic paper, or may not have time, simply not have time to keep up with all of the academic pubs. And these academic pubs, by the way, may be very, very flawed. And AIs may not be as flawed as pubs, in my view. That's a topic for a different video. And the second thing that we're bringing back is compounding pharmacy. So if you get into a stage where you have multiple correlated health issues, and for example, ED and diabetes, that's highly correlated, and heart health, that's highly correlated, weight loss desires, all of that stuff. If you want to take your health seriously, and you're in medium health or medium to bad health, it's easy for you to be prescribed sometimes 4 pills, 3 pills. And then you forget. Then it's patient adherence. Patient adherence becomes a problem. You have to go everywhere with a pill pack. Not with compounding pharmacy, HIMS makes that difference because it can make a custom drug for you with all of the ingredients that you need to solve your problem in a single easy drug. And you typically attach to that drug something someone really cares about. Like say, what if you attach birth control, or what if you attach ED treatment to the one pill that also has all of your other needs? I bet you're gonna have great patient adherence. People are gonna take those pills if you compound them with perhaps your most pressing health issue. And so this is why I think HIMS is better. I've covered HIMS multiple times on the channel. Happy to buy it again at these levels. I'm back in this stock. So hopefully you found this video interesting. This was not investment advice, no financial advice. This is just entertainment. I hope you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful day.